Hi guys, thanks for watching and tuning in to another episode of The Scottish Trader. I'm going to basically do a lot of these wee tutorials when people are needing a wee hand and show them, obviously, if they're going wrong anywhere, then obviously try and help them out as best as possible. Um, so a few people have asked me about this strategy, and I've tried to explain it as best as possible on Discord, and to some degree, my, my spelling isn't the greatest, and obviously I hit some keys sometimes. And before you know it, I've got a sentence there that you can't even bloody read. So half the time you'll end up with bloody dyslexia after you've read one of my walkthroughs. But hopefully this is a wee bit better, because it'll surely be easier to explain anyway. So you can see on my screen there. Let me just close a few things and I'll move Discord over. Right, so I've got yous up on my other screen here. Right, if you need to chat to me, don't chat through the YouTube because I can't actually see that screen. Chat to me through the Discord VIP Alt TA Beginner. I'll be able to see any comments from you guys and I'll be able to answer to any questions you might have along the way. If you need me to just obviously stop me, ask me a question, and I'll be happy to obviously go over it. First off, we're going to start by looking for, well, to be fair, right, we need to have two windows open, right, for a start. We need to set up our charts. We need to have all our significant levels in place. So I've got them set up in folders like this. So how I'll do it is I'll basically just, let's open up one window then out. Make this a wee bit easier. So we'll open up one time frame. We'll go for monthly. We could already see two levels there, one there and one there. Now they would get marked with the horizontal line. You would choose a colour, and just for easiness sake, right next to it, monthly, and have it the same colour. Alright, so I've already got all these levels already. So I'm just smoking a fag at the same time, bit rude of it. So yeah, once you've got all your levels, your weekly levels, daily levels, etc., etc., your chart will look a bit like this. It can get a bit overwhelming, right? But the significant levels that we're looking for is these. Now, how I come by these, as you can see, wherever a 4 hour or a 1 hour has fell on top of each other or very close to each other, I've created a new line on top of it, made it white, and then called it the 4 plus 1 hour. Hence why it's obviously called that. And others, point of control, stuff like that. You'll find that these levels get respected, but at the same time, you'll notice we've got this big gap in here. Now, this is obviously on the daily, so if we move down to the 4, you'll see it bounces and ranges about in here as well. So there's levels that your significant levels won't just pick up, so we need to fill that gap in. So have a wee look through your levels. There we go, we've got 4 hour. There is a daily in there. I'm going to keep that open. Weekly. Oh, the levels are okay. For the purpose of this, we'll just keep it to the 4 hour, the daily, and the significant support resistance. So, when you're having a look at this, you'll now have all these support levels. which gives you a better idea of where price could potentially go to. And you'll see a lot of the time these lines, like in Jason's course and in other videos, they'll tell you that these lines are normally respected, your 4 hour, your daily, etc. But you need to do your TA first, you need to have these levels first, otherwise you won't know if price is going to be respected by any of these levels. You won't see these levels, so if you can't see these levels, then you don't know where the price is going to bounce, where it's going to go to, where it's going to range. So that's first point of call. Once you've done that, I have set up two moving averages. One is the 21 and the other is the 13 EMA. Now, just to make this a wee bit cleaner, we're going to turn off these for the time being and just go over the EMAs. You can see that on the 4 hour that this acts as support and resistance. When the price breaks above, it uses support on its way up, and when it breaks through, it'll also bounce on its way down, and so on. You could look back in time and see quite significant moves on the 4 hour chart just with these bounces alone. So it's definitely worth having the EMAs because it helps with trend. More tools to trade, and the aggregator is one of them. Yeah, I've got the aggregator in the background, I believe, somewhere. No, that's not that one. Yep. Perfect. It is a brilliant tool to have, brilliant tool to use. It's just that agar.trade. You can find any token on it using this wee box up here, and it just basically shows you how much money is flowing into the token through all the exchanges of your choice. You could actually move this up and down the threshold and stuff like that, but we'll go over that in another video. But let's get back to the charts at hand. So now, so you'll notice, right, that as we move down the time frames, and I'll only use the 4 hour, the 1 hour, the 24 minute and the 6 minute, and I'm very strict with that, I stick to it. Any deviation for that, I've found I lose money, because I'm getting mixed signals from different time frames. Now, basically, if you go at the 1 hour, you can see the same sort of pattern, the same sort of trend, where the price has respected the EMA all the way down and all the way up. You can see that when it's gone sideways, it's broke up, it's come back down, it's broke back up. But here you would obviously, at that point, if you knew you'd see it trending sideways or anything like that, you're going to start looking for a breakout. You're going to start wanting to pull these lines and start to see what it's doing, where currently is it going. If it's trending sideways, sometimes I'll be looking for a scalp, but 9 times out of 10, by the time you've actually noticed these trends actually happening, the breakout will happen before you even manage to get into the trade. So it's best usually just to sit back and watch, unless you have a sideways market for, say, well, if we move down to the 30 minute, we'll probably be able to see more straighter trends. See, I would normally pull it like that. That's how I would normally try and look for entries and exits. by the time the move has done that, you're already going to have a level set here, and potentially from there. There. So this will help you find entries in a scalp. You would set one entry here and one entry here. Obviously, if it comes and collects this entry, good. You've got limit orders now set to exit at this level. But you would only know that level exists once it's obviously made this move. So you would probably only take this entry and potentially either be at a loss at this one or keep running happening. So what I've been doing to actually limit out is, if I had, say, my support level there, or a Fibonacci level that I was using as a take profit, then I would probably have one take profit set there, one actually set on the line itself, and then below in the further lines. That I would do also the same when you're limiting in, because again there has been a lot of front running happening. The price has been coming up, and just before it hits that level it's been taken off again. You've probably noticed that if you've been pulling Fibonacci's and stuff like that, but yeah. So EMA, Market Cipher B. Market Cipher B is pretty much the indicator that I use to identify my trade entry. I don't really use any other indicator for my trade entry. I'll kind of look at volume as well. Sometimes volume can be a good key to what's actually going on, but if it's trading at sort of that level, it's what's actually happening. Whereas when you see a lot of these spikes, you know that there's quite a lot of bullish action, because there's a lot of big bags of money coming into the token. When you see big red spikes like this, you know that there's obviously big money leaving, and so on. So when you see a lot of red spikes, usually in fashion, see if we can see anything here. There. But as you can see, it obviously come up with a dump here. That's purely because we had more. But you can see overall that by the time this area started to peak out in the price chart, money was starting to become more and more sell volume was coming in at that point. Again, this wouldn't solely be used for my entry. It's only Market Cipher B and the time frames that I've stated. You have to stick to the 6 minute, the 24 minute, the hour and the 4 hour. Do not deviate. The rest of the time frames, do whatever you have to do, pretend they're dead to you, remove them off your chart, delete them from here by removing their favourite, right click them. Now I'm sure you can actually do that in the settings and return the chart to default. Again, the 1, 3 and the 5 I believe will still be there predominantly, but the 6 minute and the hour is the one that I use for my entries. What's this? This is the HMA. Yeah, let's turn that off. And let's turn off Market Cipher A as well, because I don't use that now. That's SR. Right. You'll notice as well that I don't actually have the volume on the hour chart. I've only got it on the lower time frames. I feel it's a wee bit more accurate on the lower time frames. So let's have a wee look. We're going to go back in time, guys. We're going to replay from, say, here. Right, in fact we'll go further back. Let's go right back to, say, here. Right, so at this moment in time, we're going to pretend that this is the present, and right now we could see that Market Cipher is printing downward momentum still. It could be classed as bearish divergence at the moment between these two. So you could see that we've had a couple of trigger waves. These would count as trigger waves because it is lower than its anchor. So on this trade, I would take this based on what it's doing, but like yourselves, you would probably find that you'd end up trying to chase this price. When you find yourself doing that, stop. This is a sign that this isn't actually going to play out because there's other factors at hand here. Now, if we turn our levels back on, the I was on the wrong bloody chart there. Let's go back to this 6 minute back here. Tell if I was on the right chart, guys. Let's just close this now so we've got a bit more screen to play with. Significant daily, weekly. I don't think it was weekly, it's 4 hour. Right. So you can see here, right, that at the moment, this is the present moment in time, we're going to pretend. And this is right now heading up. There is no trigger waves currently printed. At the moment, momentum is showing that it's heading down. Money flow is also heading down. The VWAP, yes, is heading up, but that is, in itself is not a single indication that this trade should be entered on that basis. As well as that, you've obviously got factors where it's currently fighting with EMA over the price. If we start playing through this, you would be watching the chart for moves that would be starting to happen. Now, when you look at the chart, you're gonna see this trigger wave now I've printed. Before that had happened, you would have had this red dot appear. Now, the moment that red dot appears, I'm going to be waiting and looking for an entry, a green dot. You probably would have caught this a bar back at least, guys. because as soon as that red dot printed, you would have already started to look and been like, right, okay, we've got a level down there. It seems a wee bit far away. It's possible, could happen, but I'm going to continue to watch this one play out. At the same time, you're going to be looking at your hour chart. Now, the hour chart at the moment is showing a rise in momentum, but money is leaving. The VWAP at that moment in time is coming up. I would probably say that unless price is going to come down to this level or up to this level, I would not be looking to trade this anytime soon. So we'll play this on. You're going to again start to look for a trucking eyeball in this 4 hour level at the moment. Now, if you've noticed, is coming down, but price still is sitting about the same level, the closing candles, right? If this was going to be looking for a short, we would be looking for this to be higher than that, and that would be perfect bull div conditions. Nope, still at the same. If you did look at that and take it from the wick counted in the close, it gives me a wee bit more confident in the move, but that's my personal opinion. Other people can take it from the wicks, but I take it from the bodies. When I'm drawing trend channels, I'll normally go from the wick there. That there, no. This would count as a bullish divergence. But again, this is where the hour chart comes in, and money flow at that moment in time, if you look at the 6-minute chart, would still be indicating that money is leaving. So you would still not be entering this trade. You want money flow to be flowing up. That gives you a clear indication that something big's going to turn, or you're looking for a trigger wave on the hour going to print. But opportunities will arise out of this, just like this moment here, if you were taking it from the wicks to the wick. Another anchor. At this point, this is when we start to come up here, guys, okay? So you're really looking closely now, right? Because all you would see of this chart right now would be about that much. So you'll be looking at this blue candle, currently going into the purple one. I would probably say that that's an entry. You can clearly see the money curving. You would see that at this moment in time. You can see that there's a green dot just printed. a small pump. Have a kind of rule of the thumb with lower time frames as well. If you actually go back to peaks and troughs, you'll notice that a lot of the time